So the market's dropped. So the big question is it a time to start buying, or is it time to continue to protect for more downside? Stick with me as we dive into the details. My name is Brian Cannon, and welcome to Markets in 5. So if we take a look at the S&P 500, you can definitely see that the up channel trend we've been in for nearly a year has been breached to the downside. So you can see that that we are now in a series of downtrending lower highs and lower lows. Now, granted, it's a fairly short period of time, so anything can happen. But what we do is we take a look at all the indicators to determine, are we, is this a little bit bigger deal than just a minor pullback? And at this point, it's yet to be known, but it kind of looks that way. So when you see RSI, the relative strength index, dipping below 50 and it can't get back above it, that's one negative sign. And then certainly the trend break in the in the channel is certainly important. So we've had a series of touching this bottom line. And so last week we broke it to the downside. We came up, tried to test it, couldn't break back into the channel, and then now you're starting to see again lower highs and lower lows in play right now. So the futures for Wednesday, are up. So the big question will be: can the S&P, the price, retake this resistance, this pink line here? Because you can kind of see it. Came up, tried to break through it. And so today, or in the next several trading days, will be very important. So if we can break above that and build off of it, then we've got something to work with. But if we cannot take out this pink line and it comes up, kisses it, and drops down, I think personally we're going to drop down to test the 200-day moving average, which is the green line here. So this blue arrow kind of marks it, and there's kind of a light level of support here as well. So again, if we can't break this pink line to the upside, then I would say that you need to just be prepared that we're going to come down to the next level of support, which I feel is the 200-day moving average. We want to see the MACD cross up. We want to see the pink line, the resistance line getting taken out, and we want to see the RSI pop back above 50 to feel comfortable with this market. Another indicator that we look at is the 5-day moving average relative to the 100-day moving average. And historically speaking, it's not a perfect indicator, but it does provide some insight and certainly give you a little bit of comfort knowing that the decision is a good one that you're making. So you can definitely get whipsawed on some of these trades, but for the most part, if you've got the 5-day moving average above the 100-day moving average, that generally is a healthy sign for the market. And when you get it to cross down below, that's usually an unhealthy sign for the market. So we use that in conjunction with our various levels of support lines, and you can see our first trend line was breached to the downside. And then we also we're right there kissing the 5 versus the 100-day moving average. So we're watching this relationship very closely. It hasn't really broken it with any sort of force to the downside. So it's not clear yet if this is a buying opportunity or if this is something to really protect on the downside. So in this chart, we want to take a look at the Nasdaq, because obviously that's more of the growth technology plays, and right now we're seeing momentum and breadth and all of that kind of fail for the Nasdaq. And so again, we've got the RSI down below the 50 mark, which is a negative. We've got a downtrending market, so we've got lower highs and lower lows. And we've got the price dropped here below the 100-day moving average. Now it kicked back up, but fell back below it yesterday. So I imagine today, if we have a strong day, we'll finish a little bit higher. So again, we just want to make sure that that all of these signals are aligning up to tell us that the coast is clear and it's time to get back in. So with technical trading, obviously it's an art and definitely a science, but you can see that we use this to determine our level of risk that we want to accept in the market. and we want to use the signs to tell us whether we want to take more risk or reduce our risk. And right now, it's a risk-off environment. We've raised some cash, and we're just prepared. So, but again, as soon as the signs reverse and we break back to the upside and we take out some of those indicators we just discussed, we want to put the risk back on. We want to accept more risk. But hopefully that helps you understand a little bit where we are, what we're doing, and whether we should be buying or selling at this point. But certainly, if you have any questions, reach out to me, and I look forward to seeing you in the next Markets in 5.